is rocking. Go Global Conference is doing the things, eh?
And I think the most incredible thing to take actually home is the black excellence.
So kudos to GOC for a job well done. I think this is just the beginning of greater and better things to come.
There is a black business. All right. Good morning, everybody. Welcome to the Power Hour, where the hour shall pass and the power continues. My name is Ricardo Betis. I am the chairman for the Global Opportunities Committee of the Atlanta Black Chambers. This is Wednesday, July 16th. We are smack almost in the just over the middle of the year. It's unbelievable how the year is slipping away. And today is another amazing conversation that we're planning on having. So if you know someone who should be here, tap them on their shoulder and let them know that we have started some housekeeping. We would like to have you mute your mic, so ensure that your microphone stays mute as we do this session. We'll be taking some questions. If you have questions, you can put them in the chat. Let us know in the chat who you are and where you're jumping in from. And if you have any specific questions, again, you can put them into the chat. Please follow us on YouTube. Please follow us on social media. I know the chamber is looking to get to 1,000 subscribers on YouTube, so make sure you follow the chamber, Atlanta Black Chambers on YouTube, and then also Global Opportunities Committee as well, so that you can help the chamber reach you can help the chamber reach its goal by following us. So today we have he's no stranger to, at least to me, but perhaps you haven't met him before, and I think it's always good when we have folks in our midst who have expertise and who have the ability to help us to understand how certain things work. And we're going to talk about capital today. We're going to talk about we're going to talk about joint venture, and I'm super excited to have Jason Kyles as my guest this morning. And Jason, you'll hear from him shortly. A lot of the challenges that we have in our community is access to capital, access to financing. And there are lots of different pathways to do that. And over the next couple of weeks on the Power Hour, we're going to be talking to several different guests who are experts in their own rights with respect to how do you access capital and how do you really navigate that landscape. So without further ado, morning, Jason. How are you? Thanks for jumping in. Thanks for joining in the Power Hour. I know you, but I'm sure there are folks who don't know who you are. So maybe we can start there and say hello and talk about like who you are and what it is that you actually do.
Sure. Good morning. Thank you, Ricardo. I appreciate it. Thank you for having me. My name is Jason Kyles. I am the CEO of Backboard Equity Partners. We work with businesses on acquisitions, exits, and global sourcing. For the namesake of the company, we're backed by a board of investors and business professionals in our network to help our partners optimize each opportunity. My background is in technology, building enterprise operational platforms for companies, enterprise resources, with a focus on CRMs, or contact relationship management systems. And working in that space as a consultant and developing those platforms for businesses, I saw the opportunities to use the strategy of joint ventures to generate additional revenue for companies. And that's what we're here to talk about today. But I thank you. I'm happy to be here. A little nervous. I'm usually not on camera much. As you know, I talk to you, talk your ear off, talk my business partners and wife ears off and all that good stuff. Um, but that is what we do.
Awesome, awesome. Well, no need to be to be nervous. Hopefully, we'll be able to calm that during the course of the conversation. We're just gonna have a natural conversation about the joint venture and essentially what that looks like. So we probably just jump right into it, Jason. And so you run a business. So tell me a little bit about sort of why did you decide to get into this, and when did you decide that this is something that you wanted to do going forward?
Sure. As I mentioned, working in technology, building applications for customers. It was a great opportunity to work with them, but we saw other opportunities to help them grow, as well as opportunity to generate new revenues for us and for them. So, with building platforms for the companies, we're able to see the flow of their contacts, their clients, their sales, all of this data, and we see opportunities with our other clients who have non-competing or complementary resources, resources mainly being in their contact list or buyers. Everybody's looking for buyers. So looking at that, I started to work to apply and work with and be a part of different masterminds that focused on that. There's a guy named Sohail Khan who has a joint venture mastermind program that shows you how to leverage what you have in order to generate more capital. We have a lot of underutilized assets. We have a lot of ways to leverage what we have and what we know and what we do to generate more capital. So, in studying that, becoming part of masterminds, participating in these groups that also have access to other opportunities where we share resources. They're joint venture brokers who, for instance, if a company has one particular customer base, there's another company that has a complementary customer base. They can endorse that complementary product or service to another company and generate revenue just from that other company's from their client base. So they're non-competing. So essentially, I'll say I'll give you a best case scenario. There is, if you look at what you do in your business, what do your customers buy before, during, and after their transaction with you? So if they're going to go and purchase those products and services anyway, you would benefit from a relationship and having a referral relationship or an endorsement relationship with that company and saying, hey, my customers purchase this product. They also purchase your products as well. So I'd like to endorse you to my list, which will generate revenue for you and also for me as well. And I'll just take a percentage of that referral. So there's a lot of different ways to do joint ventures, and that being one of them.
So what is this joint venture like? Let's take us back to the basic for those of us who don't understand what joint venture is. What is joint venture? Is it the same as partnership? Can you explain those fundamentals for us?
Sure. There's actually two different scenarios. The first one being where most people are probably familiar with, and that is the legal structure of a joint venture. And that is where two or more companies come together and form one company for a single purpose or project. So, for instance, that would be a construction company that is going after a contract with the government or a commercial entity, but they don't have the full capacity as a single company to take advantage of that opportunity. So they would then combine their resources with another construction company, and together, while still both maintaining independence, they would pool their resources together, create another company, and go out and with their combined capabilities, they're then able to meet the requirements of that particular contract. So that is one that typically people know, most people are familiar with in the legal space, and forming a separate legal structure where you still maintain your independent company, but for the sake of that project or that particular business that you're going after, excuse me, you have a joint venture. There are other examples where they are sort of similar to, or also referred to as strategic alliances and partnerships, with JVs, whereas an arrangement between them, an arrangement that is of mutual benefit between two or more business or companies that have complementary resources. So an example there would be a, I'm really on this thing with Hennick in this deal that I'd like to work on. So there's, Hennick is doing a cooking oil manufacturing business. So people that use cooking oil most likely are going to buy cooking pots. So as if a complementary business would be a company that sells pots. They have a client base that purchases those pots. Then they would also purchase cooking oil as well. So Hennick can then introduce his cooking oil to the customer base of the company that sells cooking pots. So as anything that's complementary, there's a lot of different scenarios that go along. Again, if you just look at what customers buy before, during, and after their purchase with you.
So that's interesting. And what's the so the idea for joint venture? So you decide to come together and go after a specific opportunity. How have you seen this in our community in terms of our ability to actually joint venture? Like, have you seen, what's your perspective in terms of or willingness to joint venture, in comparison, for example, to other communities?
It's something we definitely struggle with. We're always, the message of unity is constantly pressed upon us, but there's certainly great opportunity for us to really act on that. We can borrow from the example that we see in other communities. For example, there's beauty supplies almost everywhere you look, and you would think that they would be competing, but behind the scenes, they pool their resources and they purchase the supplies in bulk, and then they have different distribution outlets. I do see that in some spaces with us, because they're retailers that kind of carry the same product. And I've seen some semblances of that in retail spaces, because we are mainly suppliers and distributors. But there's a great opportunity for us to do that in a manufacturing space. Well, if we pool our resources together, we actually can control the flow of that supply and, create different opportunities of distribution by controlling the management standpoint. There's when, primarily too, we have a lot of service businesses. So there's still opportunity there as well to combine our intellectual capital and go after bigger opportunities, leveraging our resources together. So I say there's still there's a lot of opportunity for that. We do it in the creative space. I would see that's probably mostly where I see it in collaborations, because we're primarily in sports and entertainment. So we see a lot of musical collaborations where there are artists that come together and they collaborate and they make music. And out of that, they also develop other entities or related products, events, what have you. So we do a lot of collaboration. Also in the event space, I see that as well.
Yeah, that's interesting. And because a lot of the folks that we know, or at least the folks who are on this call, they're professional service providers, and it may be a little bit harder to then do joint venture. Nonetheless, it's still possible. I mean, I know the other communities, whether the Asian community, they pool their resources together for the common good, right? Like you were saying. And what do you think the thing is that prevents professional service providers, for example, people are explaining who they are on this call, What do you think is the challenge that really prevents us from saying, you know what, we do this service and we are targeting the same group. How do we then sort of create a joint venture? Because it's one thing to actually say that you're partnering with me or I'm partnering with you, but it's another thing to actually on the books have a JV, as we call it, that actually then consolidate or efforts and move in that direction. What do you think is the thing from a professional service standpoint that makes it so harder than a physical product?
I think what you said is, as part of the key to that is, we are competing with one another. So at that point now we're fragmenting the same customer base or client base, and we have to look at that on a wider scale. So what opportunities could we take advantage of on a larger base? Who else has our customer base and expanding it? One of the reasons that we're here too, with global opportunities, there's a less saturated market in global spaces. So we are kind of concentrated in the same areas, offering similar services, going after the same things, when there are wider opportunities that we can look at in more of a corporate space that, again, we wouldn't be able to handle. Most businesses aren't able to handle individually because we're mainly sole proprietors, um, businesses with less than 5 employees. So your capacity is limited. But if you join on with 2 or 3 other companies who are sort of have a similar makeup, then you're then with a combined effort, pooled resources, united, you're able to go after larger opportunities where the audiences are. And a lot of these spaces already have our audience as captives, not captives, but they captivate our audience. And in order to really leverage it, we have to have the capacity to even approach them with a partnership. So it'd be the willingness to come under one umbrella together and understand that there is a greater demand that we can meet. And as an individual businesses, again, their opportunities are broad. So your same customer base, look at your client profile and look at other companies abroad. We have 25, 24 contacts in different regions through our regional leads. We've got 5 different chambers globally that we have MOUs with. So there's a lot of opportunities. We have to expand beyond what we consider to be just a local market. Well, that's nationally and internationally.
Yeah. And so talk about a joint venture partner. Like what's the qualification, if there is any? Like how would you describe who would be an ideal venture partner? So if I wanted to get into a JV with someone, what should I be thinking about that actually makes that person ideal for me to actually proceed in this JV?
Sure. That is a business that has something that's complementary to your customer base. Again, looking at what people buy before, during, and after your business. You could also look within your network at your suppliers, your vendors. What is the common purpose that you have? There's also impact investors. So there's investors that are looking to make impact in the communities that you're looking to serve, and look at those spaces where there are shared markets, there's shared interest. Again, I'm going to always come back to the center of ABC. We've got an ABC membership directory, 896 members. We've got the Atlanta Chamber Marketplace, which has 806 members. So looking within our community, if you're already a member, if you're not, membership certainly has its privileges because there's the relationships that we have built in our network that everybody's here for a combined mission. So I would look at those complementary businesses that are complementary to what you do and not necessarily non-competing. They can be competing if you're doing a joint venture to go after a larger product. But those businesses that have a similar shared customer base where people are going to purchase anyway. So I would say come to the table being able to leverage the clients, the businesses that you already have, bring something to the table with an interest and clarify what it is you're looking for. One of the things too I like to lift up is that oftentimes we are just straight looking for capital. I would keep in mind, top of mind, what is it that you're looking to buy or acquire with this capital? In many cases, there's opportunities for trade. There's a service that if you're providing a service and you need a particular service or product, we're able to trade and barter that service to get what you need. So you really don't need the capital. You can offer deferred payment incentives. There are different ways to finance what it is that you need just through leveraging that relationship.
Yeah, and that's what you're expert in, right? Which is going to bring me to the next point on. So now that we understand what a joint venture is, now that we understand what a joint venture partner is, and what we need to be looking for in a partner, and what we ourselves need to be, to provide to a partnership. The how do we use that as a strategy to unlock capital? So how can a business then say we've seen an opportunity, we've decided to do a JV? How do we use that joint venture partnership to then unlock capital? And maybe if we can explain this whole capital thing, because everybody needs money. And from my experience, a lot of times we don't know what we need the money for. It seems like it's just one of those things that we hear everybody talking about, that they need money, and we just say that we need money too. Like it's like a chorus. But when I ask people what do you need the money for, they don't know what they need the money for, because they're not definitive, they're not clear on what they need the money for. And in my own experience, it's almost kind of like, when I talk to folks and they say I need money for marketing, they say, well, what does that actually look like? Are you going to be hiring someone? Do you already know who you're looking for, etc.? So there is this lack of clarity that we sometimes run into, both as investors and as financiers, etc. And as a potential JV partner, I believe that's one of the things that I would look for: clarity in thought. In how are you thinking about this, and can you demonstrate clarity in thought? And is that, because that's part of the attraction. So how do we unlock capital using joint venture in your opinion?
Sure. Exactly what you said. One is the main thing is to understand what you need the capital for. What is the intent at the very core of it? What are you looking to use the capital for? You pose the scenario of marketing. So the point of JVs, or the point of marketing, is that you're looking to acquire customers. And in many cases, your cost of acquisition, it costs almost 5 times as much to keep acquiring new customers. So you really can take a look internally. Are you maximizing the client relationship that you have right now? Do you have any loyalty programs? Are you contacting, what is the relationship you have with your customers? Are you incentivizing them to be recurring customers? Is there any outbound communication? Are you just relying on them to come to you? Because if you have financial goals that you're looking to meet, then you can be proactive and leverage those who've already voted with you to procure your services or your product. So continue to have them do that on a recurring basis. You can also offer referral incentives. So incentivize them to refer other customers who they already know what you're capable of, and then there's no better testimonial than a customer that you already have. Incentivize them with referrals, through discounts or offering bonus items. So leveraging the relationship that you have would already help you to grow the existing capital that you have. And a joint venture, they can be inbound and outbound. Again, being inbound, you talk to the customers that you already have that are within your network. If they're aware of other strategies or other things that you're looking to acquire, or your financial goals, if they're aware of it, they may have someone in their network as well that's also able to provide it. So inbound, you can offer again to the non-competing customers or companies, where customers buy those things before, during, and after what you have to offer. Ask your customers what do they buy before, during, and after they've dealt with you, and then go after their referrals and say, hey, I've got a whole list of clients here that I'll endorse you to them and just take a percentage of the transaction that you make. That creates your whole revenue stream of capital just by introducing them to your client list. There's outbound. You can do the same thing. Find those same non-competing companies and say, hey, I would like for you to endorse me to your clients, and I'll give you a piece of the transaction that I make. So just simply sending out an email, when you partner with that particular company and they send an email endorsing you and saying, hey, this Ricardo's a great guy. He does great work. If that can be done through just a simple coupon code, or you can be more technical and do different affiliate programs, affiliate links if you want real-time tracking. So with someone that already has your customer base, you're going straight directly to buyers. Whereas if you're buying Facebook ads or you're doing marketing, you're getting a smaller percentage of those actual buyers. So going to, again, business that is non-competing and working with their buyer list and leveraging your product, all you're going to do is discount the product, and you've created lifetime customer value, because once you once you market to that particular client base, you now acquired them, and you've got lifetime customers that you can continue to get recurring sales from. So you've acquired them directly with no cost, as opposed to, again, spending money in marketing where your cost of acquisition could be extremely high. Did we lose you, Ricardo?
Yeah,
Oh,
thanks.
you're on mute. Okay.
Sorry, I'm here. Thanks for that. So just to be clear, that capital is not always money. Am I understanding it right? That when you say
Correct.
capital, it doesn't always mean actual money. So you have social capital, you have intellectual capital, you have all kinds of categories of capital, but it does seems like when we talk about capital, we're always talking about money. Like we need working capital. I just want to make sure that we're all clear. Am I interpreting that right? That you don't capital is not always money. There are all kinds of types of capital, and the ones that we're talking about here is not always sort of cash, right? Like we can leverage the things that we have to then access some of those kinds of capital that we want. Am I interpreting that right?
Absolutely. That is absolutely correct. Yeah, we have to define again what it is that is our ultimate need, and it may not require money. And again, we have underutilized assets even within what we do. Within your company, again, as they say, the money is in the list. So the best thing you could do is have good relationships with your clients, with your vendors, and let them know what it is that you're looking for and what can you offer them. The relational capital, which is one of my favorites, which is certainly here within the GOC itself. Again, as I mentioned, with having contacts in 24 different countries, MOUs with 5 chambers of commerce whose mission is to facilitate business. If you come to them with what you have available, you can work with them to do business, to generate more revenue. But the relationship capital, if you were to try to go and get 24 contacts in different countries, working with just yourself is expensive. But if you try to even hire a firm to do global business, it's all going to be cost. So for a small investment in a membership where you have these relationships that are already sustained in different places, and maybe even your existing networks, it's already there. So it's really about ultimately looking at what it is that you want at the end on the other side of what appears to be capital, just focusing in on what you want and leveraging what you have to get what you need.
Yeah, so joint venture is possible to unlock capital, and joint venture comes about from relationship, which is also a capital source. And just so that point of order on this, it's actually 40 countries, so we're like twice that amount. Because we're in so many different spaces, and we have people on the ground in all these different spaces that can actually help us with our relationship capital. And people may say, well, Ricardo, right now I need money. I need some hard cash. And so my question usually is like, well, what do you need the cash for? I need to buy equipment. Well, who do we know within the community that's actually in that business that could potentially help to leverage the knowledge or leverage the know-how they have to be able to access you purchasing equipment without having the need to then invest in so much in terms of in terms of capital, right? So it's being clear about what is it that you need the capital for. Like, what is that you need? First of all, is it like financial capital, that you need, or is it some other kind of capital that we can leverage? Relationship capital. I think that's one of the strong points in GOC. It's the relationships that we all have with each other globally. And I think you alluded to that earlier, that it's not not everybody is going global. It's not a party spot, excuse me, where it's a full house. It's a very niche area that most people are not going to venture in, because they'll say that, I'm going to focus on, my base or my city, etc., and do what I do. So can we, how do we then use this, if you may, this joint venture? We unlock capital. How do we use this to then expand globally? We talk about expanding globally, and sometimes people get overwhelmed with the idea because they put all these different countries in their head all at once. And we say, well, we're a platform, by the way. First and foremost, we are a platform, which means you can come up on there and dance. You can dance whatever you want. You can dance salsa, you can dance reggaeton, you can dance reggae, hip hop. It's your choice. But you can choose how you want to dance. And that's kind of like how we operate as a platform. You now decide, okay, I'm interested in South Africa, and I want to be able to unlock the capital that I have access to within the South Africa market, and vice versa. Or you might be in South Africa interested in the US. You don't have to be interested in all of them. You just need to pick one or two, I suppose, and then you leverage that, and you go right in. How can a joint venture be used to then do this kind of expansion globally?
Sure. One of the things that I've seen on some of the calls with our regional leads and the MOUs, or mainly the regional leads, is that they have the opportunity on the ground for, they're needing infrastructure, they're needing operational expertise. So in this case, it would be intellectual capital, which I think we don't leverage enough of. If we're primarily service businesses, that means we have the intellectual know-how of operating in that capacity, in that space. And you've generated clientele, you generate expertise. And in many of the countries, they actually need that. They may have the framework, they have the infrastructure, they have investment capital, and they have the clientele, but they don't know exactly how to implement the sustainable operations. But you do, you're doing it here. You may feel that you need capital to grow. Well, there's an opportunity here for you to work with them and share and partner with your expertise, your intellectual property, whether it be systems that you built, your scalable operations. They need that knowledge and expertise in order to make it a viable and sustainable business in that space. So they have all the other resources, and you can just plug in. So with that, if they've already got a client base, which is the driver, especially for investors, they want to know there's going to be some guarantees or sureties on the return on their investment. So you lend or invest your expertise in operating or partnering with those businesses. In many cases, as I've learned on some of the recent calls, you actually can own the business 100% within that global market. So you have just expanded your business utilizing all the local resources and assets. And again, we're able to do that. You don't have to pay money to find all these other people. We have local contacts that are already there. So bringing what you have to the table, to the MOUs, to the regional leads, and letting them know what you have available, they then can take that to those community, to those businesses, and say, here's a potential partner for you. Once you work with the business to say, hey, we can provide the know-how for the structure here. There are global impact companies that are already doing this too. There's a lot of people that don't look like us, but they're taking advantage of global impact in these communities by leveraging their know-how, the capital resources that they may have here or abroad in other spaces, doing a joint venture with the businesses that are there and creating sustainable businesses. So with our local contacts and everybody coming together, we're able to do the same thing. So I would say definitely leading with that for those service businesses, for product businesses. It's our advantage right now, the volatile tariff situation. It's becoming easier to export. It's more of an advantage to export what we have here over to these other countries and, look at what they're receptive to and what their needs are and feel the need.
Yeah, no, thank you. I'm gonna drop a poll because it's time for a poll moment. I'm gonna drop a poll. We've got a couple questions I would like to get your temperature on. So feel free to give us your feedback around joint venture, and then we're gonna start taking some questions. If you do have questions, start putting them into the chat. And I know I saw a question about the ABC directory. So if you go to the AtlantaBlackChambers.org, you should, there is, I believe the directory is actually on there. If not, then if someone on the call has the access to or a link to the directory, please share it in the chat so that folks who are looking for that can actually find it. The other thing too is, I don't know if Conrad is here from Malachi Labs. If Conrad, if you're able to come on, we would love to spotlight you. This is a GOC ABC member, and I'd love to bring you up right now to talk about Malachi Labs and what it is that you're actually doing. So welcome, Conrad. Thanks for jumping in. Please tell us who you are. Tell us about Malachi Labs. Tell us what you do.
Hey guys, awesome. So I'm Jamaican, who immigrated here about 30 years ago. Computer science, been in computer science now for well over 25 years. Last about 2020, decided to start up Malachi Labs, kind of to come out of corporate America. You know what I mean? So we are a full stack software development agency. So what does full stack mean? So we do the design, development, the apps. We can build your social media design. We do animated videos all the way down to custom software development. So and we also integrate. So for example, you have Salesforce, HubSpot, you have all these different softwares. We can integrate and streamline. It's like data management. So streamline all your data into all these third-party applications, integrate that into your websites. Some of our clients right now, Children's Minnesota Hospital. So what we've kind of built for them is kind of like, so parking registration, problems with nurses changing shifts. And they were kind of always doing that on paper, right? And it became a problem. So we built out an app for them where the nurses, once they shift change, they can register and they can be assigned parking and even impact their payroll, the payroll department. So we build pretty much any software we can build out and integrate it into all the different third-party applications. So that's kind of in a nutshell what we do.
Awesome. And how can people get to you? Maybe you can share in the chat if someone is interested in using your expertise to build something. How can they get to you, Conrad? Feel free to put that into the chat. I think you have a website as well. It can go to. Is it malachilabs.com?
malachilabs.com. And yes, Malachi, the last person in the Old Testament, is that guy.
Awesome.
So yes.
Well, thank
Malachi.
you for sharing and put that in the chat. And we've got to give a big shout out to Malachi Labs because they're actually one of our marketing sponsor for the Go Global conference, which is actually coming up in a couple of weeks. If you haven't yet had your tickets for Go Global, you should certainly lock that in. We're going to be launching very soon the an updated version of the Go Global conference website, and thanks to Malachi Lab, who has been working really hard behind the scenes. So I can't wait to show you guys what that actually looks like, so you can see the work that he's done. But feel free to check him out, malachilabs.com, to take a look to see how he might be able to help you. Conrad, thank you so much. We appreciate you. And hopefully we'll get some folks reach out to you for some help here.
Thank you. Thank you, guys.
Awesome, awesome. So we're still putting through the poll. We got 48%. We like to reveal the poll when we're in the 80s, so feel free, folks, to still give us your feedback. Jason, I want to go back to this joint venture thing because I think, where do I actually start in finding a joint venture, right? And do I need to date this JV partner, not in the romantic sense, right? But I mean, do I need to date this JV person before we get into anything? Is there a way to test this thing before we get too serious with it? What's your reaction on that? Your thoughts rather.
Oh, absolutely. Yeah, you do want to vet and qualify certain partners. You want to look at their business and how they're operating, especially if you're going to avail them to your client base, people who trust you and spend money with you. You don't want to endorse anybody and ruin the relationship you have with your clients. And vice versa. You want to make sure that if you're doing an outbound joint venture, that you are leading with integrity and a trust factor and professionalism that you would want them to endorse you for. So yeah, you would look, I mean, you start within the network that you have. You could do a test run, like I said, with the inbound and outbound transactions. I would say, well, yeah, you just put it on a test run, say for 30 days or, depending on whatever agreed upon time period. Let's do a deal. Just take a certain product or service that you have, and let's agree upon what the percentage split would be. And let's just send it out to maybe a few customers, few of your clients, not all of them. Just maybe do it in half and see how it goes, whether response rate, see how they deliver on the service. If there's integrity in them, depending on the structure in which you're tracking the sales, is there integrity there? Like I said, some people kind of old school, well, not old school. It just depends on whatever's viable for you. If you already have a framework of coupon codes where you're able to track the transactions, or if you're a little more advanced where you have an affiliate tracking system where you can see the sales on both sides in real time, and you kind of get a sense of, okay, this is someone that I can work with. We can expand this relationship and, actually form a marriage where it's mutually beneficial.
Yeah, no, that makes sense. And what's the split? Because so just going through an actual scenario here, we found somebody and we want to kind of test them out for a few days. So there's that having that I would say sort of that requirement. So you have to make a list of what are you looking for in the ideal JV partner, and then as you begin to identify that individual, have that conversation, and but just be clear that, okay, let's test the waters and let's see if this actually does work before we get into anything too serious. What kind of split usually happens with JV? Is it always 50-50? Is that something that you recommend based on your experience, or is it depending on the weight that each party is going to carry? Like, what's your recommendation around how do we split this proceed, so to speak?
Yeah, it depends on the experience, and some businesses may not be familiar with the process. So to incentivize them, it's suggested that I would suggest that you offer more then 50%, maybe more towards like 70 or 80. I know that may sound kind of costly, or say for an inbound that you would offer it's gonna benefit whoever is selling the service or the product. So I would say on that end, if you're selling the product, so say I want you to endorse me. I'm going to offer you closer to 70 or 80% to incentivize you to get access to your whole customer list. Because once I complete that transaction, I'm going to acquire that customer for myself and generate recurring revenue. And it's not costing me anything. There's no marketing dollars. So I would say over 50%. And if you can also engage a joint venture broker. So if you don't have time to go out and solicit these partners, you can get a broker to negotiate on your behalf. Of course, you have to give the broker a percentage. Typically that's 10 to 15%, many times lower, 5 to 10, depending on the profit margin of your product. But you definitely want to give your endorser, your JV broker, a higher split to incentivize them to get access to their customers, which again, it's costing you nothing up front, and you're going to gain a customer, which you can continue to build on for lifetime value. So I would definitely say more than 50%.
Yeah, and it feels like part of why we don't get a lot of people doing the JVs because the structure of the deal is not attractive enough to the other party or to ourselves. And when you talk about inbound and outbound, can you explain that a little bit for us so that we understand what are we talking about here, so that we're clear?
Sure. So inbound would be me endorsing you to my client, your non-competing product or service, and taking a percentage of the transaction. Yeah, that is attractive to me. Just 50%. I'm like, well, I'm availing you to my buyers, and people are aware of that. As business people understand, hey, I'm giving you access to my customers that you're going to keep for life. So, in some cases, people just sell the actual customer list and, at a certain agreed upon price. That's effective too, because you don't know what you're going to get out of it. If I were endorsing you, then so yeah, it would depend upon that agreement. If I just sold you the list, or I endorse you to my clients, which I think it's better because you don't want emails of people that you don't know just popping up in your inbox. We get that all the time. Even if it's a product that you might like, it's like, well, how did you get my information? I think that's intrusive. That's why I always lean towards the actual endorsement. So that would be inbound. So a partner that you could solicit and say, hey, I have a client base that helps to reduce your marketing costs. These people buy your product or service before, during, after mine. So outbound would be you seeking a joint venture partner and saying, hey, I'm looking to acquire customers in this space that are not competing. You have my customer base. They also buy my product, which doesn't compete with yours. And I'm willing to offer you a higher percentage on the transaction so it's attractive to you. And again, with my understanding, I'm going to keep these customers for life, or I have access to them, and you significantly reduced my cost of acquisition. So that is inbound and outbound.
Yeah, that's fascinating, and that's a way to then it sounds like you can essentially shore up some capital, because they always say somebody's got this capital somewhere, and you might be thinking, I don't know who to go to, I don't know where to go to get this capital, but you've got to be asking who has got this capital. And if you're a part of a network, then your initial ask is probably going to be like, hey, my name is Ricardo and I offer this, that, and I'm looking for a JV partner who can potentially help me to expand this service to clients who, like you said, the before purchasing before me, what they purchase before they get to me, and what they will purchase after me, which is very interesting because I never actually thought about it like that. Because if you're actually in the middle of that, in terms of that journey, now you have a database or you have a CRM with all these clients that have worked with you, and it's like, what do they buy next after me, and what did they buy before, and could I get a JV partner that I can work with to help me to facilitate that? That's very, very interesting. I think that is probably the most simplest way that I've actually heard you explain it. So what is it that I'm not asking you that you need to tell us?
Like that question, because I had a couple of things that just been burning, but I'll simplify it and keep it short. We need a power day instead of an hour. But I'll say one thing that is top of mind in that regard is another way to generate revenue is contingent purchase orders. And that would be you go to several buyers of your product or service and give them and get them to agree to a purchase order contingent upon agreed upon terms. So say you're going to provide this product or service at this price, at this, on these terms at this time. And they say, if you can deliver on that, then we'll go ahead and make this purchase from you. So it's contingent upon you making that deliverable. You may not have the capacity to deliver on it right now, but it's contingent upon you being able to do it. So you can then take this contingent purchase order to show investors or lenders and say, hey, I have the business here. I've actually have the buyers that have expressed interest in purchasing my product or service, contingent upon me delivering it, but I need X amount of dollars. So if you need the capital, here's the justification to the lender or the investor to say, hey, I've got a buyer. I just need to help, I need bridge funding. I need you to help me to bridge this gap in order to supply this purchase order. So that way you don't have to lean on your personal guarantees, which is what most people are getting hung up on, your personal guarantee, your personal credit, your business credit. So it's really just taking action on those items, on these opportunities with and relationships with buyers that you can leverage then to get the capital that you need if that's what you need. But again, it's always starting, well, what do you actually need? And just go directly to that. Well, hey, I need more equipment. Well, what can you offer this company that supplies your equipment? And there's the law of price and terms. Well, if they charge you a certain price, then at the negotiating table, you can negotiate the price and terms. Was maybe this price or these terms, or we can just actually barter. So that is something that I really like, that you're able to leverage in what you have. And then there's so many underutilized assets. If you have space or equipment or machinery, how could you leverage that with a non-competing company to use it in off hours that would generate you money? I heard yesterday the wellness committee was utilizing the bar facility for their meeting. I don't know if they're charged or not. It may be donated, but there are many cases where you're not getting full use of the items, the space, the equipment, or the resources that you have, that you can then sell that and make it available to a non-competing business and just generate revenue from that.
Yeah, no, great. That's a great point. So looking at the assets that you actually have that are underutilized, and a lot of times it doesn't have to be physical asset, because we have a lot of intangible asset as professional service providers, right? So
Right.
that's your CRM, that's probably your website, that's all these other things that you actually are doing on a daily basis. See if you can then facilitate some joint venture to utilize those kinds of stuff. Like, hey, I've got the space on my website. I've got this amount of traffic that comes to it. I can leverage that, or the contacts in your CRM, etc. This is powerful. We can take a couple of questions. If you have a question, you may want to raise your hand and probably ask Jason away. We'll be taking that now. We're 64% in our poll, so we're still asking you to participate so that we can bump that number right up before we reveal the poll. Any questions for Jason? Anyone wants to jumping and ask a question on JV? All right, so I don't think I see someone raising their hand. Joel, you're up. Please unmute and go ahead.
Good morning.
Good morning.
Good morning.
Good morning. Yes, my question is, I had for over 20 years owned and operated a salon, and I just recently closed the salon, and now I'm um in the what is that? Well, I'm doing classes. I'm offering classes on running a successful business in the hair industry, and also teaching classes on hair extensions because that's a very profitable business. And I was just trying to come up with some ideas to joint venture my courses. I was thinking more like beauty schools, something like that. Could you kind of give me some ideas on that?
Sure. I think you're on the right track. Absolutely. Going to beauty schools, they already have trainees or clients that are looking to get in that space, and they would benefit from your course. I just backed up a little bit when you first initially said that you closed down a salon, just thinking kind of an off-track JV. Um, I'm pretty sure if you've had the salon at that length of time, then you've had a great client list in those customers that came to your salon. So that would be something that you can leverage as well. If you're no longer providing the services to them, then there's another salon that they need to go to. If they're not getting their hair done by you, someone else is interested that can provide those services. You can then JV with another salon and say, hey, these are all my previous clients that are looking for, service as well. But I think that is a great direction to go in with your courses. I would say also look at industry memberships. So the memberships in the salon industry, the hair care industry, where there's already members, and make your offering there. Some cases they may require you to get a membership, or you could just do a sponsorship and maybe um, get access to their membership list and just have something to go out in distribution with your course. And I would say be in a position to make an offer to that membership body. Well, if you do the sponsorship, that kind of covers it. But if you want to offer a special discount to those members for your services, then you just acquired your whole base in one place.
Okay.
Yeah, that's awesome. And I think you have someone already want to JV with you. So look in the chat, and I think you already got a deal there.
Awesome.
So go ahead and
There's
leverage
that.
that. We'll take one more because we're just about a couple of seconds before we have to jump. But August, we'll take you since your hand is up.
Thank you. So I just want to say thank you. I got on this call a little late, and once I jumped on it, I was very impressed with the information, considering I'm not that familiar with joint venture. So first and foremost, Jason, thank you so much. Ricardo, thank you again. Um, so my background is in travel and international travel, but I will say that my hometown, Jason, is in Illinois. We're Rust Belt City. Okay. We've been Rust Belt for over 100 years, and there's a good significant amount of us, right, that are just regular, coal miners, manufacturing, and it's been generations of us essentially, right? And we're in a fishbowl. So other than myself, there's very few that travel back and forth to Atlanta or other major metropolitan areas. Maybe, Chicago, but outside of that, a lot of families just kind of stay in their fishbowl. They're educated, they're highly skilled, but they just stay there, so to speak. So when you were bringing up the just being able to really have the scalable operational experience, that right there, I do know that there's generations of us here that have it. We just don't really venture out, so to speak. How would I be able to test the waters to find out if that is something because I would love to see more people kind of venturing out with their skill set.
Mhm.
And I think I think it's needed. Maybe not so much in America, maybe so, maybe not. But definitely overseas, as you were talking, I think that's possible. Would I go to a broker that you were talking about to test those waters?
Yeah, you could. You can go to a joint venture broker, but again, being a proud member of the GOC, I would say get a membership and speak with one of our regional leads about what it is that you have to offer. As you said, with the internet intellectual and operational capital that you have, and what that output has generated you, even there, what are some anticipated outcomes from what you know that can be employed in those spaces? And then you can just do your due diligence based on their response. Um, just looking at different areas, if you just kind of look at similar industries in different spaces and some of the things that they are doing, are you able to help them scale with what you know or reach a desired output, maybe even beyond what theirs is? So I would definitely say, of course, first and foremost, membership has its privileges. We have people on the ground who are already there. They can actually reach out to these companies and put you in direct contact with them. But again, if you aren't in a position, you're in position to do that, to become part of GOC. But yeah, you could reach out to a broker as well, and which is also good because it's transactional based. So they're incentivized, whatever they buy, whatever they bring to the table, they're going to take a percentage of it.
Okay, thank you for that. Yeah, you're right. I mean, why not just reach out to the GOC and kind of get the ball rolling to see if this is viable. Thank you. I appreciate it.
Yeah, no, that's awesome. And I think there are a lot of people on here that would love to help you as well, August. So feel free to reach out. Guys, we're 3 minutes over and I want to get Jason's final advice, final thoughts on JV. And Jason is a member of the of GOC, by the way, and he'll be able to you'll be able to connect with him in our private community. So feel free to lean into that. I mean, he's a JV guy and he focuses on that, and you can lean into his expertise to help you to facilitate that. Jason, your final piece of maybe advice, your final bit of thoughts around this JV and why we should really lean into it more than we're doing right now.
Sure. Thank you again, Ricardo, for having me. I certainly appreciate being on this platform. I would say, first and foremost, lead with an assessment of what it is that you have to offer. What are your capabilities? Who are your clients? Who are your customers? What assets do you have that can be leveraged? And with that, what are your needs? What are the end goals that you're looking to achieve? And not just having capital, but there are ways to generate it. So first and foremost, the assessment. And there are investors, again, that you can partner with. So look at your books. Are your books clean? Are they up to date? Can you convey very succinctly where you are financially? Even if if you're in a space, you can use these JVs to shore up any issues that you're having to partner. But I would definitely say take full inventory and be ready to communicate that in the best way, what it is that you have to offer intellectually, operationally, the output that you've been able to gain, and what you can project. Another piece of what we do in the acquisitions is there are many things that you can purchase. That you can acquire that have a list. You can buy Facebook groups, you can buy YouTube groups, you can buy people always doing events. You can tap into those communities because they've done the event, they've built up a great customer list that you can tap into if it's similar or complementary to your business. So first and foremost, get an inventory of what you need, understand why you need it, and how can you and look to leverage it.
Awesome, awesome. Well, thank you for your time today, Jason, and thank you everyone for sharing your time with us. We dropped the poll results so that you could see the ways that we're thinking around JV and just kind of what we're actually doing. And most of us have not been in JV, so that's a huge opportunity for us to leverage that to unlock the capital that we actually need. And you'd be surprised to know who is sitting in that CRM of yours, or who is sitting in the CRM of the JV partner, etc. So continue to lean in. The hour has come and gone, 7 over, so we've got to jump. But thank you everyone for doing this with us. Next week we're gonna be, make sure you download the chat or you grab the survey, because we want to get your feedback. We're going to be having a lot of capital conversation over the next couple of weeks, just so that you guys have the full 100 on capital and what does that actually mean for your business. And again, capital is not always money, so you've got to also think about that, because money comes in all shapes and sizes, but that's what capital is. So thank you everybody, and hopefully you'll have a great day. We'll see you next week. We're going to talk about capital in another way, shape, and form. So thank you everybody for coming. Have a great rest of your day. We're gonna bring this thing up real now, so we can just watch an outro video as we go. What's going on with my video here? All right, thank you everyone. I don't know what's happening with my video, but maybe I'm just
Thank you.
Thank you everybody. We appreciate it.
Thank you, Ricardo. Thank you, everyone.
Good job today.
Of the Atlanta Black Chambers, the Chamber of the Year.
Atlanta is rocking. Go Global Conference is doing the things, eh?
And I think the most incredible thing to take actually home is the Black excellence.
So kudos to GOC for a job well done. I think this is just the beginning of greater and better things to come.
There is a black business. All right. Have a good day, everybody. Thank you.